Hey guys, welcome back. I hope you had a really great day trading today. So today was Tuesday, August 13th, and we did have PPI in pre-market, and that did come in cooler than expected, and the markets rallied. But before I go over the price action today, I did have a question in last night's video, and it does come from Royal Palms, and the question reads, when you bring up the 30-day average, how should we apply that information? And that is a really great question. And I'm assuming that you're asking about the 30-day average volatility. And let me set this up before we got today's price action so we just see the ranges as they were set up. So this is SPY, and the implied move is this first range right here, and that is calculated from options. And the implied move can expand and contract based on VIX, which is a measure of fear in the market. And then we also have the 30-day average volatility, which is this wider range right here, and it's not always wider. A lot of times it lines right up with the implied move. Sometimes it's a little bit wider, sometimes it's not quite as wide. But the 30-day average volatility is a measure of the average move in the past 30 days. So this does not expand or contract based on sentiment. This is literally just an average of what we've seen in the past 30 days. So it's wider because we have seen really big moves lately. So while VIX has contracted, it made the implied move smaller from options, but the 30-day average volatility does not change when VIX changes. So that gives us a more steady trading range to look at. So then when we put the two together, we have the implied move from options, and then we have the 30-day average volatility. And then recently I've also been adding the second day implied move, and the implied move is just calculated by, on whatever contract you're looking at, you sell one at the money call and one at the money put, and that combined premium gives you the expected move in each direction. And then you could do that on the next contract, and that gives you the expected move in each direction by selling one at the money call and one at the money put. So when you combine all of that together, it gives you some choices of strikes to look for. And then really it depends on your strategy. So if you're buying options, then maybe find one that's a little bit closer. If you're selling options and you don't want that strike to hit, but you're selling premium, maybe go a little bit wider. I like to sell spreads, so lately I've been looking at this second day strike. So that's kind of how I put the three values together to set up a game plan to look into the next day to choose a strike that will pay. So hopefully that answers your question. Maybe one day I'll do a video and get a little bit deeper on how to set all of this up and why, but hopefully at least I got a basic answer to you. So, all right then, so let's go over what happened today. And, all right, give me 1 second here. All right, so SPY did open today with a gap up. And we gapped up right into the bottom of this island top gap, which was the leftover gap that we had from FOMC and CPI and PPI in June. So that closed out right away. That is right where we gapped into, so right here. And then we pushed up above the 30-minute 200 moving average, which previously each time we came up to it was a resistance. So we pushed right up above that. We got to the top of the implied move here. And then from there we pushed even higher and we got up into this gap. This was the gap from after Amazon earnings. And we took it all the way up to the next day's implied move. So I had the implied move at 542.04. Sorry, I had it at 542. We closed right above that at 542.04. So we did close out a big portion of this down gap from Amazon earnings. That was last Thursday. And we closed with a little bit of that gap left and just underneath the 50-day moving average. So definitely a big move today. SPY closed up 1.64%. VIX down 12.6%. We are now back under 20. And we did not close within the implied move today, but we did close within the 30-day average volatility. And we did basically take it all the way up to the next day's strike. And then in SPX, same thing here. We opened with a gap up right into that gap, which was the rest of the FOMC, CPI, and PPI in June gap. And we also had another little gap right here, an up gap from the last week of July, and you could see it was support right here. We had just a little bit of that gap left open. We slid right past it and into the down gap. And this is that down gap from right after Amazon earnings, and we did leave a bit of that open. And if you have been paying attention to when gaps don't completely fill, just because we didn't fill this gap, that could cause trouble tomorrow. So we do have a little bit of this gap left, and we are just underneath the 50-day moving average. And just underneath us right here, this 30-minute 200 moving average, which we gapped above, this 35 EMA on that time frame did come up and cross back above. That is a bullish signal. We would need to see some follow through on that since it just crossed over. We could see a rejection there and then more downside. But if this pulls through tomorrow, then technically we would be bullish again on the 30-minute time frame. SPX closed up 1.69%. VIX again down 12.6%. And we did not close within the implied move here. And then QQQ. QQQ did open with a gap up today, and we gapped right into the Amazon down gap. So Thursday right here 2 weeks ago, we had Amazon earnings in after hours, huge drop overnight, and then we gapped down. So we gapped right back up into that gap today. The 4-hour 200 moving average was right there, and we pushed up, got above the 30-minute 200 moving average, and we basically broke up above that down gap. And the top of the implied move on the day was 457, so right here, which is basically where we gapped up to, and then we took it even above the next day's implied move, which was 460. So really big move in QQQ. And I am currently bearish right now, and my concern is that because we had VIX at 65 and now we have VIX at 18, we could see a really crazy squeeze here. So even if you're bearish like me, don't let your bias get in your way. Trade the chart. QQQ did close up 2.48%. VXN down 6.7%. And we did not close within the implied move, but we did stay within the 30-day average volatility. And IWM, we did open here with a small gap up. We got back above the 4-hour 200 moving average, came down just a little bit, didn't close out that morning gap completely. There is a little bit of that gap left open, and from there that 35 EMA and the 4-hour 200 moving average was right there, and it brought us right back up and got us to the top of the implied move. So the top of the implied move was at 208, and you could see that only the wick got above that, and then we did pull back down to close just underneath that 208 strike at 207.97. And you can also see that that 50-day moving average was right there. And we also had that gap from last week where we had that huge gap down, but we didn't close out the rest of that gap by the end of the week. So that was left open, and you could see how that can cause trouble when we leave a bear gap open like that. So as soon as we got into that gap, got pushed right back out. And IWM did close up 1.65%. VX, the Russell Volatility Index, down 4.34%. And here we did close within the implied move. And then DIA. We opened DIA with a gap up, and we got above the 50-day moving average right here, and that was a previous resistance last week right here, and even here we tried to get above it but got pushed back down. So today we gapped above the 50-day moving average. That morning gap is still open a little bit. We have a little bit of that still left, and that 35 EMA was right here. That 50-day moving average was right here. Those two levels brought us back up. We got into that gap from last week that we didn't close out. So last week's down gap is completely closed out here now, and we pushed right above and got just underneath the 30-minute 200 moving average. So we are still bearish on this time frame even with that move, and DIA did close up 1.02%, and we did stay within the 30-day average volatility here. So there you have it, guys. PPI did turn out to be bullish for the market today. We do still have CPI in pre-market tomorrow. That is the consumer side inflation. And I'm not going to lie, I'm a little bit suspect of this entire move only because of VIX at 65 and now back under 20. I just feel like there's something deeper brewing underneath. But again, I try so hard not to trade my bias and actually read the chart and put my trades in based on that. But I am really interested to see how all of this plays out. Anyway, I'm rambling. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and if you love that I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications. If you have any questions at all, leave me a comment. And if you learned something new today and you want to buy me a coffee, don't forget about that thank you button. It's a really easy way to show appreciation, and I definitely appreciate it. Alright, so starting in SPY, tomorrow's implied move for CPI is between 536 and 548, and that is from options. The 30-day average volatility is quite a bit wider, 531 to 553, so about $5 wider in each direction. And just like yesterday, we have an implied move that is 1%, 30-day average says 2%. And then the next day's contract, so this is Thursday's contract, is between 534 and 550. And to the upside, the first level that we have is going to be the rest of this down gap from Amazon earnings. And the momentum here is flat and down, so we may see a stall at this level. Top of the implied move is at 548, and on Thursday's contract, 550. And of course, anything in the 30-day average volatility is fair game. And then to the downside, we have the 30-minute 200 moving average. And that 30-minute 200 moving average has been a resistance level. We did break above it today with PPI data coming in soft. We did have really low volume on that move. And right here, you could see the other times, ever since we crossed down right here, every time we came up to the 30-minute 200 moving average, we saw it as a resistance and got thrown back out. Same thing over here, we swung back up, 30-minute 200 moving average, and rejected. So today we did get back above it, and we closed pretty high above that level. 35 EMA is still underneath the 30-minute 200 moving average. This is technically still a bearish close right here, and we'll see tomorrow if we get a follow through to the upside or if we come back down and test that level. The 30-minute 200 moving average, though, momentum is down, so it would not be surprising to see a retest of that level tomorrow. And then the bottom of the implied move is at 536, 534 on Thursday's contract, and then just underneath tomorrow's trading range, we have the 4-hour 200 moving average. So this definitely looks like a pretty fun trading range. Taking it over to SPX, the implied move over here is between 53.75, and 54.95, that is from options. 30-day average volatility, quite a bit wider, 53.25 to 55.50. So again, 1% on the implied move, 2% on the 30-day average volatility, and Thursday's contract 1.25% between 53.60 to 55.10. And personally, with the volatility the way we've had it, I have been looking to that second day strike. To the upside, we do have the rest of that gap from last Thursday. This was the Amazon earnings. And then right above that, we have the 50-day moving average and the 1 hour 200 moving average. Both of those are within the implied move. The top of the implied move is 54.95, 55.10 on Thursday's contract. And then near the top of the 30-day average volatility, we do have a resistance level from right before we saw that big drop right here. And that's just outside of that, 55.55. That would be the next resistance above our trading range. And then to the downside, we do have that 35 EMA and the 30-minute 200 moving average. And you can see right here, we did see a bullish cross up. So in SPY, we didn't quite get that cross up. SPX, we did. So tomorrow, very important to see if we see that follow through, because we could see a rejection at this level. And CPI could give us the momentum to see that rejection. And that is that 30-minute 200 moving average is right there at the bottom of the implied move at 53.75. 53.60 is Thursday's bottom of the implied move. And then towards the bottom of the trading range, we have the 4 hour 200 moving average. This is what I trade, and I am really looking forward to this trading range. It actually looks really fun. So then taking it over to QQQ, the implied move over here is between 455 and 470, and the 30-day average volatility is a lot wider, 447 to 478, and on Thursday's contract, 453 to 472. And to the upside, we don't have anything within the implied move. So our first level to look for is going to be 470. That's the top of the implied move. And then that 1 hour 200 moving average is right there as well. Then just outside of that, we have this green line. That is a previous support that was turned resistance. So right here it was support, right here it was resistance. And I do believe if we go further back, it was support. Yep, right here. So support, resistance definitely could be a resistance that is just outside of the implied move for the next 2 days. And then from here, you could see that down gap. And it's actually an island top because we have that up gap right here and then that down gap right here with that 50-day moving average going right through it. So the actual implied move doesn't look too bad, and then it does look pretty treacherous outside of that. So that is the upside of QQQ. And to the downside, 35 EMA, 30-minute 200 moving average. So this time frame, the 30-minute time frame, we don't have a cross up yet right here, but it is right at a very critical level. So if that 35 EMA comes through and we see a follow through there, then we will have turned this time frame bullish. And you could see the previous times we were close to the 30-minute 200 moving average, we got pushed away pretty far. So right there. Today we did get above it. We gapped up and pushed higher. It was very low volume today. And again, I am feeling a little suspect about this entire move. But again, I read technicals, and if this comes up, we are bullish on this time frame. The charts really don't care about my bias. And right at that level too, we also have the 4 hour 200 moving average right here. So this could offer a bit of support. We also have the rest of that down gap from Amazon earnings. We gapped above and into this gap. So this part right here was left open. And actually, if I had this set up right, this right here is an up gap. So now we have a island bottom. to make things just a little bit more complicated. So down here we have a reasonable amount of support, and 455 bottom of the implied move, 453 on Thursday's contract, and then outside of that the bottom of the gap is at 450 here, and then the 35 EMA on the weekly time frame, that was a really huge level. I did post that really short video that showed just how important that level is, and we did make a pretty solid bounce on that 35 EMA. I am going to just take it out to that time frame. You can see right here 35 EMA has defined the uptrend ever since January of 2023. So all of 2023, all of 2024, we've been above that level. Last week we did get underneath it, but we closed above, and this week you could see we are carrying that bounce upward. So that weekly 35 EMA is our support right now. And you could see once we did get underneath it and actually print a red candle, that level became a resistance. But so far, it's been catching us as support. So we'll see if we can hold it this week, if inflation data does support us holding above that level. So that is QQQ, and taking it to IWM. Implied move for IWM is between 203 and 213. And let me find my arrow here. So 203 to 213, and that is from options. The 30-day average volatility is $2 wider in each direction, 201 to 215, and on Thursday's contract, 202 to 214. And to the upside, we do have the rest of last week's down gap. We got just to that down gap's door right here, just underneath the 50-day moving average, and that is where we stopped today. So above us we do have a bear gap, and if we get above that we have 211. 211 is a very long resistance, and before that a support. So after the COVID rally right here, we did see 211 as a support level. You could see we bounced off of it many times, and then once we broke underneath it, it was a resistance. So we swung back up and resistance, and then we were trading sideways along that for quite a while, and then when we came back up, resistance. Recently we did have that big rally above it, we did get back underneath it, and now we are just underneath that 211 level. That is this dashed line right here, and above that we have this crazy looking gap, two up gaps and a down gap that is from that rally where we broke above 211. So we broke up above 211 with an up gap, another up gap here, and then we came back and gapped underneath those two gaps. That is at the top of the trading range tomorrow, along with the 1 hour 200 moving average and the 30-minute 200 moving average. So definitely dangerous looking to the upside. To the downside, 4 hour 200 moving average is right there. That level basically has just existed. We have not seen it as a support or a resistance, but it is there. Good to know about. And then at the bottom of the trading range, 203 is the bottom of the implied move. 1 week 35 EMA, that big level, we did see it as support right here and here. It is right in this gap from last Wednesday going into Thursday, and 202 bottom of the implied move for Thursday. And underneath all of this we have the 1 day and the 1 week 200 moving averages, big levels. They did cross right here, and when we gapped down last Monday, that is exactly where we caught and bounced back up. So those two are right here, and this also looks like a really fun trading range. The moving averages here are still very flat. You can see they're just going right across the trading range. They don't have any upward momentum or downward momentum. The first downward momentum moving average that we see is this 30-minute 200 moving average at the top of the implied move, and then the 1 hour is right here as well, and it's tilted slightly up. So that could draw us into this battlefield right here. And then DIA, and I do have a question for you guys. Do any of you trade DIA? I have to say I don't love doing analysis on this. So if nobody is trading this, then I might just drop DIA and maybe bring it up once in a while. But DIA, we only have weekly options here. So the implied move on the week was between 387 and 403. And then the 30-day average volatility for tomorrow, 392 to 404. And then to the upside, we do have the 30-minute 200 moving average and also the 1 hour 200 moving average. And the 30-minute 200 moving average did cross underneath the 1 hour. That is bearish. So definitely watch out for these two moving averages here. They definitely could be a resistance. At the very top of the trading range, we have this island top, and we do have a down gap and then an up gap. And this is the down gap that once we made that cross down right here, we gapped down and then we dropped really hard. So that is a interesting wall that we have at the top of the trading range for tomorrow. And then to the downside, we have the 50-day moving average, and then also the 35 EMA is right here underneath us. Last few trading sessions, we have been staying pretty close to that level. And then underneath the 30-day average volatility, we do have the 4 hour 200 moving average. And let me zoom out just a little bit. Weekly 35 EMA, that is the big level. That is what caught us to the penny when we dropped last Monday. That is just outside of the implied move for the week. And then also at the bottom of our trading range tomorrow, we do have the up gap from last Wednesday going into Thursday. If we do drop that far for some reason, that could offer a little bit of buying support. So there you have it, guys. Good luck for CPI tomorrow. In most of the trading ranges, we did knock out some of those gaps, which makes tomorrow's trading ranges a lot more fun looking. And have fun tomorrow. Trade safe. Make sure you take profits when you're up. And I will see you guys tomorrow.